The IRS is holding refund money that many American seniors never receive, not because they failed an audit, not because they cheated, not because they made some complicated tax mistake, but because the form required to claim the money was never filed. That is the part most retirees are never told. The IRS does not automatically send every refund just because you might qualify. It does not call and say, "You forgot a credit." It does not mail a warning saying, "There may be money sitting here with your name on it." The system waits. And while it waits, the refund clock keeps running. That is how a senior can miss $4,873. The money does not disappear because the senior was careless. It disappears because one return, one amended return, one credit schedule, or one missing form was never submitted before the deadline. The most dangerous part is that many seniors who lose this money do not feel careless. They feel safe. They filed with a preparer. They used tax software. They were told Social Security meant they did not need to file. They thought owing nothing meant there was nothing to claim. That single assumption can be expensive. With the IRS, owing nothing and being owed nothing are not always the same thing. A senior can owe zero federal income tax and still have a refund sitting behind a missing return. A senior can file every year and still have one schedule missing. A senior can pay a preparer and still never have an old year reviewed. A senior can trust software and still skip the question that unlocks the credit. This video is not about blaming seniors. It is about showing you the exact places where money disappears quietly. There are two groups watching this, and both need to pay attention. The first group already files a tax return every year. Maybe you use a paid preparer. Maybe your daughter helps you. Maybe you use tax software. Maybe you have filed the same way for years. And you are thinking, if there was a refund available, someone would have caught it. That sounds reasonable. But it is not always true. A preparer can only claim what they check. Software can only follow the answers you give. And if a specific credit, schedule, prior year return, or amended return was never reviewed, the IRS usually does not fix that for you automatically. The second group is even more exposed. These are the seniors who do not file a tax return at all. Maybe your income is mostly Social Security. Maybe you were told years ago that you were below the filing threshold. Maybe you thought, "I do not owe tax, so there is no reason to file." That belief can cost retirees more than almost any mistake on the return itself. Not filing and owing nothing are two different things. You may not be required to file in some situations, but filing may still be the only way to claim money back. A refund does not always mean you overpaid a large tax bill. Sometimes it means federal tax was withheld from a pension, job, retirement distribution, or other payment. Sometimes it means a refundable credit was missed. Sometimes it means an old return was never filed. Sometimes it means a filed return was accepted, but not complete. That is the trap. The IRS may know some of your numbers, but knowing your numbers is not the same as sending you the best refund you could have claimed. So the question is not only, do I owe the IRS? The real question is, did I file the right form to claim what I was allowed to claim? That is the question that can protect your money. In this video, we are going to walk through the main refund areas seniors miss, the forms that matter, the deadline that can shut the door, and the free tax help that can check this without handing over hundreds of dollars. Stay with this carefully. The most dangerous refund is not the one the IRS denies. It is the one you never claim. Here is the mechanism. It is not complicated, but once you understand it, it should make you angry in a useful way. The IRS refund system is reactive. Money flows out when a valid claim comes in. That claim can be an original tax return, an amended return, a missing schedule, a credit form, or a prior year return you should have filed but never did. If the form never comes in, the money may stay exactly where it is. The IRS receives tax forms from employers, banks, pension companies, brokerage firms, and Social Security. But receiving information is not the same as preparing the best possible return for you. The IRS may know that tax was withheld from a payment. But if you do not file the return to claim that refund, the IRS may not send it. The IRS may have enough information to see that income existed, but it does not automatically test every senior for every credit and then mail a check without the right filing. That is why the word claim matters. A refund is not only something you may be eligible for, it is something you must claim. And the form is the request. No request, no claim, no refund. That is how the system works. This is where many retirees get trapped. They think the IRS works like a benefits office. They think if the government already has the information, the government should send the money. But tax refunds do not work that way in many cases. The IRS processes what you file. It does not always tell you what you could have filed. A busy tax office may focus on getting the current year return finished. Tax software may push you through a standard path. A family member helping you may not know which senior credit forms to check. And if you did not file at all, nobody may be reviewing that year. That is how 3 years disappear. A tax folder goes into a drawer, a spouse gets sick, a move happens, a preparer retires, a year is skipped because Social Security was the main income, then the deadline passes. And after that, the money may be gone. For most refund claims, the general rule is that you must file within the allowed refund window. Usually that means within 3 years after the original return was filed, or within 2 years after the tax was paid, whichever is later. That sounds like a long time. It is not. Not when old paperwork gets scattered, not when prior returns are never reviewed, not when someone assumes, if I owed nothing, there was nothing to file. The IRS does not pay you because you were almost right. It pays when a valid return or claim is filed before the deadline. So if you are watching this and thinking, I already filed, you still need to check what was filed. If you are watching this and thinking, I never file because I only receive Social Security, you need to check whether filing could still produce a refund. And if you are watching this thinking, my preparer would have told me, ask a better question. The right question is not, did you do my taxes? The right question is, did you check the refund forms in prior year amendment window? That is a very different question. Now let's go to the first place seniors get confused. The first refund area is the Earned Income Tax Credit, often called the EITC. Most seniors hear that name and immediately dismiss it. They think, that is for young working families. Or they think, I am retired, so that does not apply to me. That answer is sometimes right, but it is not always right. The EITC is powerful because it is a refundable credit. If you qualify, it can create a refund even when your tax bill is low. But the EITC also has strict rules. You do not qualify just because you are older. You do not qualify just because you receive Social Security. You do not qualify just because you need the money. The credit is connected to earned income. Earned income generally means wages from work, self-employment income, or net earnings from a small business. Social Security is not earned income for this credit. Pension income is not earned income. Interest and dividends are not earned income. IRA withdrawals are not earned income. But many retirees still have earned income without thinking of it that way. A senior may work part-time at a store, do seasonal work, clean houses for pay, babysit for pay, do handyman work, sell services online, or earn small self-employment income from consulting, bookkeeping, driving, repairs, tutoring, or another side job. If that income existed in a prior year, the EITC may need to be checked for that year. Do not assume. Run the numbers. Here is where the specific rule matters. For a 2025 return, IRS rules say a person with no qualifying child may be able to claim EITC only if earned income is below $19,104 for a single filer or $26,214 if married filing jointly, and the person is at least 25 but under 65. That last phrase matters. At least 25 but under 65. So a normal age 65 plus senior with no qualifying child should not hear this and assume childless EITC automatically applies. That is not the rule. But the EITC still deserves a careful check for certain retirees. For 2025, the income limit rises to $50,434 for a filer with one qualifying child, or $57,554 if married filing jointly. With two qualifying children, it rises to $57,310, or $64,430 if married filing jointly. And the investment income cap matters too. For 2025, investment income must be $11,950 or less to claim the EITC. That one number can block retirees who have dividends, interest, or capital gains, even if they also have some earned income. This is why the dependent question and investment income question both matter. Some older taxpayers support a qualifying child. Some grandparents care for a dependent. Some families have a disabled adult child who may meet the rules. Some retirees in their early 60s still have wages or self-employment income and may be inside the limits. The answer is not every senior gets this, and the answer is not no senior gets this. The answer is check the exact year, exact income, exact age, exact filing status, investment income, and dependent situation. For the lower income senior who had part-time wages or self-employment income, this is one of the first areas to check. Pull the return. Look for the Earned Income Credit line. Look for Schedule EIC if a qualifying child was involved. Look for wages, Schedule C, and self-employment income. Then ask yourself, did anyone actually test me for EITC that year? Not this year. That year, every tax year stands on its own. For the senior who does not file at all, this can be even more important. If you had a small job, a seasonal job, or self-employment income, and federal tax was withheld, you may have had a reason to file even if you thought your income was too low. A filing threshold is not the same as a refund opportunity. You may not be required to file in some situations, but filing may still be the only way to get money back. For the comfortable retiree, EITC may not be your path. If most of your income comes from Social Security, pensions, IRA withdrawals, interest, dividends, or capital gains, this credit may not fit. But do not skip the video because of that. Your refund opportunity may be in the next forms. Go to the IRS EITC assistant. Use the numbers from the tax year you want to check. Answer the questions exactly. If the tool says you may have qualified and your return did not claim it, that year needs review. If you already filed, the correction tool may be Form 1040X. If you never filed, the move may be filing the original return before the window closes. That one check can separate a missed refund from a lost refund. The second form seniors need to know is Schedule R. Schedule R is used for the credit for the elderly or the disabled. This credit has been around for decades, yet many seniors have never heard of it. That alone should bother you. Because if a credit is designed for older taxpayers, but older taxpayers never see the form, something is wrong with the process. Now, I need to explain this carefully. Schedule R is not the same type of credit as the EITC. The EITC can be refundable if you qualify. Schedule R is generally a non-refundable credit. That means it can reduce federal income tax you owe. And if you already had tax withheld or paid in, reducing your tax can increase your refund. But if you owe zero tax and paid zero tax, Schedule R by itself usually does not create a cash refund. That difference matters. A misleading explanation can make seniors think every missing Schedule R means money is owed. That is not true, but it is also not true that Schedule R should be ignored. The right answer is to run the calculation. The credit for the elderly or the disabled may apply if you are age 65 or older by the end of the year, or if you are under 65 and retired on permanent and total disability with taxable disability income. But the credit has income limits. It looks at adjusted gross income. It also looks at certain non-taxable Social Security, pension, annuity, or disability income. For many retirees, those limits reduce the credit to zero. That is why tax software may not highlight it. That is why preparers may skip over it quickly. That is why seniors are told it probably does not apply. But probably is not good enough when your money is on the line. You need the worksheet. Here is the insider part most seniors never hear. Schedule R starts with an initial amount. On the 2025 Schedule R instructions, that initial amount is $5,000 for several single filer or one qualified person situations, $7,500 for certain joint return situations, and $3,750 for certain married filing separately situations where the spouses lived apart all year. Then the form does not simply hand you that amount. It reduces the calculation for non-taxable Social Security and certain non-taxable pensions, annuities, or disability income. It also applies adjusted gross income limits. After those reductions, the remaining amount is multiplied by 15%. That is why two seniors can both be 65 and get completely different results. One person may get no credit, another may get a small credit, another may benefit only because federal tax was withheld, and the credit reduces the tax that would otherwise eat part of that withholding. This is why the worksheet matters. If you are 65 or older, ask whether Schedule R was checked. If you use tax software, search for credit for the elderly or disabled. Do not wait for the software to offer it. Go find it, open the section, and answer the questions. If you use a paid preparer, ask this directly. Did you run Schedule R for the credit for the elderly or disabled? If the answer is yes, ask whether the credit was reduced to 0 and why. If the answer is no, ask why it was not checked. Do not ask, did you get me the biggest refund? That question invites a vague answer. Ask for the form. Ask for the worksheet. Ask for the reason. For current returns, there may be another issue seniors should ask about, the enhanced senior deduction. For 2025, eligible taxpayers age 65 or older may qualify for an enhanced senior deduction of up to $6,000 per person or $12,000 on a joint return if both spouses are eligible. But that deduction is separate from Schedule R. Do not confuse the two. A deduction reduces income that is taxed. A credit reduces tax. A refundable credit can produce a payment. A non-refundable credit usually cannot create a refund by itself when there is no tax to reduce. These differences sound technical, but they are exactly where seniors lose money. They hear one word, refund, credit, deduction, form, and everything gets mixed together. Keep it simple. Schedule R is worth checking. It is not a guaranteed refund. It can matter if the numbers fit, and if it was missed on a prior filed return, Form 1040X may be the way to correct that year before the deadline. Pull your last 3 returns and look for Schedule R, Schedule 3, and the credit for the elderly or the disabled. If you do not see it, write down the year. Then take that return to free tax help or a qualified preparer and ask them to run the calculation. Not guess, run it. That is the difference between being told no and knowing no. The third area is the one that can matter most for seniors who already filed. It is the amended return. The form is Form 1040X. Most retirees think that once a tax return is accepted, the year is finished forever. That is not always true. The IRS allows taxpayers to amend a return when something was wrong, missing, or incomplete. You can correct income, filing status, deductions, credits, dependents, or tax liability. You can add a missing schedule. You can fix withholding. You can ask for a refund that should have been claimed on the original return. But the second chance has a deadline. Generally, if you want a refund, the amended return has to be filed within the allowed refund window. Usually that means within 3 years after the original return was filed, or within 2 years after the tax was paid, whichever is later. This is not a friendly suggestion, it is a deadline, and seniors miss it because they think prior year returns are old news. They are not old news if the refund window is still open. They are money folders, they are evidence, they are claim files. They are the only way to know whether the IRS owes you something from a year that everyone forgot. For the senior who filed every year, start with the last 3 years. Do not look only at the refund amount. Look at the forms, the schedules, the withholding, the credits, the filing status, and whether federal tax was withheld from pensions, wages, IRA distributions, or other income. Then ask the important question, was my return accepted or was my return complete? Those are not the same thing. A return can be accepted and still miss something. A return can produce a small refund when it should have produced a larger refund. A return can show 0 tax due while still leaving withholding unclaimed. A return can be technically filed but never reviewed for a senior-specific issue. That is why Form 1040X exists. For the senior who did not file, the question is different. You do not amend a return that was never filed. You may need to file the original return for that year. And if the IRS is holding withholding from that year, the refund usually cannot be released until the return is filed. This is where the I owe nothing assumption becomes dangerous. A retiree may say, I did not file because Social Security was my main income. But if that same retiree had tax withheld from a pension distribution, wages, unemployment, gambling winnings, or another payment, there may have been money to claim. If the return is not filed before the refund deadline, that refund can disappear. Now, Form 1040X is not something to file carelessly. Do not amend just because a YouTube video scared you. Do not invent a credit. Do not file a messy amended return while ignoring other errors. A Form 1040X should be accurate. If the original return had another mistake, correct that too. If you are adding a credit, attach the required schedule. If you are changing income, include the correct documents. If you are not sure, get help. Confusion does not stop the deadline. There is also a timing issue. The IRS says you can usually check the status of an amended return around 3 weeks after you submit it. Processing generally takes 8 to 12 weeks, and in some cases can take up to 16 weeks. So if a refund window is getting close, waiting until the last minute is a bad plan. Here is your action step. Make 3 piles: the most recent tax year, the year before that, and the year before that. For each pile, gather the return, W-2 forms, 1099 forms, Social Security statement, pension statement, IRA statement, brokerage forms, and any IRS letters. Then write these questions on paper. Did I file this year? Was federal tax withheld? Did I have any earned income? Was EITC tested? Was Schedule R checked? Was there a refund I never claimed? Would Form 1040X be needed? That paper will tell you what to ask at a free tax site. The sooner you ask, the better. An amended return filed after the window closes may be too late. Now let's talk about the part most seniors overlook. You may not need to pay hundreds of dollars just to find out whether you missed a refund form. The IRS supports free tax preparation help through programs like VITA and TCE. VITA stands for Volunteer Income Tax Assistance. IRS guidance says VITA generally helps people who make $69,000 or less, people with disabilities, and taxpayers who need language assistance. TCE stands for Tax Counseling for the Elderly. It focuses on people age 60 or older and specializes in questions about pensions and retirement-related tax issues. That matters because seniors do not always have the same tax questions as younger workers. A senior may need help with pension income, Social Security taxation, retirement distributions, missing prior year returns, credits, withholding, amended returns, and whether a form was skipped. AARP Tax-Aide is also a major free tax help option used by many older Americans. The point is simple. Checking this does not always require an expensive preparer. A simple return can still be worth reviewing. A one-page return can still have withholding. A senior with mostly Social Security can still have a year where filing matters. A retiree with a small part-time job can still miss a credit. A widowed senior can still have the wrong filing pattern after a spouse dies. A preparer can skip a question. Software can miss something if you answer incorrectly. When you contact a free tax help site, do not ask a vague question like, "Can you check if I get money?" Ask this: "Can you help me review whether I missed a prior year refund, a refundable credit, Schedule EIC, Schedule R, withholding, or a Form 1040X amended return opportunity?" That question is specific. It tells them exactly what you are trying to check. Before you go, gather the right paperwork. Bring your ID, Social Security information needed for filing, Social Security benefit statement, W-2 forms, 1099-R forms, 1099-I-NT forms, 1099-D-IV forms, brokerage statements, pension documents, IRA distribution forms, prior year returns, IRS letters, and anything showing federal tax withheld. If you are checking an amended return, bring the original return for that year. Do not walk in empty-handed and expect someone to rebuild your financial life from memory. Paper proves the claim. Now, if you use a paid preparer, there is one question that can tell you a lot. Before your next return is filed, ask, "Did you check whether I qualify for EITC, Schedule R, the enhanced senior deduction, and any prior year amended return opportunity?" Then listen carefully. A prepared tax professional should be able to answer clearly. They may say, "EITC does not apply because you had no earned income." They may say, "Schedule R was checked, but the income limits reduced it to 0. They may say, "The senior deduction was applied." They may say, "There is no amended return opportunity because there was no withholding or missed credit." That is fine. A clear no is useful. A vague answer is not. If someone says, "The software handles all that," ask where it appears on the return. You are not being rude. You are paying for accuracy. And if you are using free filing help, you still deserve a clear explanation. Now bring this back to the main warning. The IRS refund system is reactive. Money moves when the correct claim is filed. The IRS may not call, warn you, or tell you that a form was missing. And if the refund window closes, the second chance can disappear. A senior can miss $4,873 because the right form was never filed. For some people watching, the amount may be smaller. For some, there may be no refund. But for others, this video may uncover money that has been sitting behind a missing return, a missed credit, an overlooked schedule, or a prior year amendment nobody checked. You do not know which group you are in until you check. So here's what you do tonight. Pull your tax folders. Look at the last 3 years. Check whether you filed. Check whether federal tax was withheld. Check whether you had earned income. Check whether EITC was tested. Check whether Schedule R was considered. Check whether Schedule 3 shows any senior-related credit. Check whether Form 1040X may be needed. Then contact a VITA site, a TCE site, AARP Tax-Aide, or a qualified tax professional and ask the exact questions. The seniors who recover missed refund money are not always the ones with complicated returns. They are the ones who check before the window closes. Before you close this video, send it to one senior in your life, a parent, sibling, neighbor, church friend, or someone who has not filed in years because they thought Social Security meant there was nothing to claim. Both types of seniors need this warning. One may have filed the wrong way, the other may not have filed at all, and one share from you could be the reason they check before the refund window closes. In the next video, I'm going to show you the Social Security filing decision that can permanently reduce a retiree's monthly check and why many seniors do not realize the mistake until it is too late.